What's going on, dividend chasers? It's the Dividend Bloodhound here, back with another investing episode. Yep, as you can probably tell, I'm home, I'm not in a hotel anymore, and it is Christmas in our household as well. A video regarding our house move is coming in the pipeline. We've just been very busy people, so you'll have to stand by for that one. I'm bringing some quite sad and surprising news today about AT&T. Long-standing stalwart of dividend portfolios across the world has decided to freeze its dividend at 0.52 cents a share for the time being, putting at risk its dividend aristocrat status if it doesn't continue to raise it in the near future. So that is a little bit of a shock to a lot of investors across the world. If you want to find out more about this, stick around after the intro, consider liking and subscribing to my channel, and I will see you on the flip side. Hey again guys, welcome into the video. So AT&T is freezing its dividend for the time being, trying to save itself money. Is this good business sense for AT&T stock? Who knows right now. They are going to be saving some money to concentrate on paying down some debt. But is this also going to pave the way for a dividend cut in the future? We really don't know at the moment. I can give my opinion on it, which is what I'm going to do. But who knows, you'll have to come to your own conclusion and weigh up AT&T's fundamentals to see what they're going to do. As I've already mentioned, AT&T has an almost godlike status within dividend portfolios. For the most part, dividend investors across the world have AT&T in their portfolios in some form or another. Now for me personally, it is my biggest position. So when anything happens with AT&T stock, obviously my ears are going to prick up and I'm going to pay attention. Holding the dividend at 52 cents a share may come as a massive surprise for some people. However, if you look back at AT&T's recent dividend history, it has only been raising the dividend at 0.1, essentially a penny, over the last 4 or 5 years or so, since 2015. And I got some of this information from Dividend Club on Instagram, so do pop over and check out his page for superb investing information. Now the reason for the dividend being held and the dividend growth being held so low is because AT&T has a huge amount of debt to pay off essentially. Now it has got really good revenue and really good cash flow, so this is why most investors came to the assumption that it would be fine because the dividend is well covered. But I think the management and the board have decided that they really do want to start tackling this debt pile. So how much will this dividend freeze save AT&T? Well, if you take that just 1 cent and times that by the 7.1 billion outstanding shares, then you reach a $71 million saving for AT&T per quarter, which means a saving of $286 million per year that it can then spend on paying down its debt. Now the trouble with that is if you've done any research into AT&T stock at all, you'll see that its total liabilities, including long-term debt, is $343 billion. So saving $285 million a year is a little bit like chicken feed, to be fair. It's going to take an awful long time to pay this debt off, but what I think the board is trying to do is give itself some leeway to enhance paying down that debt and actually start a program of debt reduction, but still maintain the dividend as it is. And being a 7% dividend, which is what I currently get, a 7% dividend yield, I'm not too fussed about missing out on 1 penny per quarter. The debt to assets ratio of AT&T is actually 66%, so I don't view that as too bad, which is why a lot of investors came to the same conclusion. AT&T has a lot of revenue and an awful lot of free cash flow as well, which it can obviously deploy to pay its dividend. As long as it is never getting into debt to pay its dividend, which it isn't, then that is something that is a really strong point for this company. Now the dividend is covered 1.35 times over, which isn't as high as some companies, but as long as it is above 1, that means the company can afford to pay the dividend. Of course, the next logical question is AT&T stock then therefore preparing for a dividend cut further down the line? Now, I don't see this as the case. They've given themselves some leeway, but if they were going to commence a dividend cut, I think they would have just done it anyway, sort of ripped the band-aid off, shave the dividend down to a more manageable 3 or 4% or whatever they ultimately decided, which they haven't, I think they would have done that anyway rather than just freezing the dividend where it is. So personally, pending an absolute disaster somewhere in the AT&T stock company, then I don't think the dividend is at a massive risk. Yes, it's frozen and yes, it's not going to grow. However, I am led to believe by my research that they do actually have until the end of 2021 to raise the dividend, and they will get to keep their dividend aristocrat status and still go on towards getting dividend king status. However, ultimately, this is aristocrat status and king status. It is just a nice to have. It's great. It is awesome to be in that group of stocks. But ultimately, when it comes to business health, you want the board of directors concentrating on that. You don't want a company getting itself into debt purely to maintain dividend aristocrat and dividend king status, which is a little bit like ExxonMobil is doing at the moment. That company is not making enough money to pay the dividends that it is paying. However, it is continuing to pay them for the short term, and that money has got to come from somewhere. The way I see it is AT&T still has significant revenue streams coming online. It is selling some of its assets, less profitable assets, to pay down some of this debt. But then if you look at some of the flagship things that it's got coming, like HBO Max, it currently has 38 million subscribers for that entity, 2 million ahead of schedule of where it thought it would be approaching Christmas 2020. Now, if you look at the likes of Netflix and Disney is well clear now at like 86 million subscribers already, which is ridiculous. But its theme parks are closed, so it's having to concentrate heavily on advertising its Disney Plus service to keep the revenue coming in. And then all Netflix is, that's what Netflix provides. So they're going to be a massive streaming company. They're getting close towards 200 million subscribers, but that is all they do. Whereas AT&T has its mobile service, its internet service, HBO, Warner Brothers, all of that encompassed in this revenue stream, where the other two don't seem to have as much in that case, in terms of streaming wars at least. So what do analysts think of AT&T stock then? Well, this information and these analysts' predictions and price targets are completed before this announcement about the dividend freeze has taken place. And they came up with a 67% hold rating and a 33% sell rating. Wells and Fargo came up with a sell rating at a price target of $25, whereas Credit Suisse and Wolf Research came up with a hold at $31, which is approximately where the share price is at. If the price is below that point and below $30, in my opinion, I have been buying it recently when it has been at the $29 mark. However, that being said, AT&T is by some way the biggest position in my portfolio, and in light of this news, I'm not going to be buying any more shares per se with my own money. I will continue to reinvest the healthy dividend that I get from them, but I'm just going to hold on buying any more shares. A, because it is the biggest position in my portfolio anyway, so I will be slowing down. But in light of this news, I'm just going to hold off a little bit and catch the rest of my portfolio up to it. So my FREETRADE dividend portfolio will be coming online. The update will be coming online shortly, so you can see just how it makes up my portfolio, but it's roughly 10% of the balance, and I want to make sure that the rest of my portfolio stays in balance with that and all the rest of the positions catch up. I'm happy to keep bagging this 7 to 8% yield that I'm getting and reinvest that, of course, and then I'm going to just watch, wait and see how the company develops in its debt reduction and how its revenue continues to develop and how HBO Max continues to develop over 2021. And then it'll be really interesting to see if and when the company decides to sacrifice its dividend aristocrat status and save money and continue to reduce debt, or whether they go for the dividend increase, which for all intents and purposes I would expect to be very minimal, so probably a penny per share again, or two pence a share. It's going to be nothing amazing, but it'll be very interesting to see what the company decides to do with that. As always, I will continue to monitor the situation, and if anything major changes or a dividend cut is imminent, then that may change my thoughts and my position on this company. And of course, I will bring out a video in due course if that is the case. But for the moment, as I've already said, I'm going to hold what I've got, reinvest the dividends what I've got, and let the rest of my portfolio catch up with this one. Thank you very much for watching, guys. It's been an absolute pleasure. Please consider liking and subscribing if you've enjoyed this video, and I'll hope to see you in the next investing episode. Catch you there.